All right, let's move on to a drug company. We'll talk about this little company called Eli Lilly. That's been in the news probably the last few years here. Their symbol's LLY. They are a drug manufacturer. Not much short on the float here, about 1%, 84% institutional owned. PE ratio, 52.4, double the industry at 24.7. Price of sales, 13.6 versus 4.3. Price of book value, 39.4 versus, 5.8. And then price of cash flow, 66.2 versus 15.9. Can we say that this company is extremely overvalued in valuation ratios? I mean, it's just ridiculous. However, they have delivered because of the GLP-1 drugs that they have, and I forget the name of their drug. But their earnings over the last year were up 64.9%. The industry was up 43.3%. Sales for the last 1 year for Eli Lilly were up 30.3 versus 11.7. But listen to this, the 5-year growth rate from the analysts, they think this is over, which I wonder too. Competition comes in, prices come down. 5-year estimated growth from the analysts is a negative 182. So you should not be buying their stock based on that. The whole industry is down 53.3. They pay a small dividend, 0.8%, and they use 37% of their earnings to pay that out. That's pretty high. We do see that on the balance sheet, they got a current ratio of 1.3, same as the industry. Their debt, surprisingly, with all this money they've been bringing in, is kind of high, 2.2 versus 1.3. Net profit margin, very good, 25.9 versus 17.4. Return on equity, 75.5. That's double the industry at 33.8. And free cash flow, I'm going to tell you, the industry is at $9.8 billion. I don't know how this is going on here, but the free cash flow for Eli Lilly, a negative 50. So I think it's a negative 50,000. So we'll call it break even. And they have no free cash flow coming in. I'm not sure why.
It might be CapEx. I know that they're investing a lot in factories and stuff. Yep. So if they're building out factories, that's one thing with free cash flows. It can change a lot.
Yep.
Because if you're doing all of these capital expenditures, I mean, they're going to be there maybe 1-2 years and then they fall off and all of a sudden your free cash flow looks great. So, but again, it's something you'd have to understand.
Yeah, it's kind of tough for a business because you want to invest in the future. You want to spend that money because you want it to keep going. But when you spend too much and things slow down, competition comes in. Now, I'm assuming they probably have a lot of debt. I'll check the balance sheet while you're doing that with your thing here, but I bet you they have a lot of debt now, too.
Yeah, well, let's look at the current price here for Eli Lilly. It's $802.83. Again, their ticker symbol, LLY. 52-week range, though, the low, $623.78, and the high, $935.63. Year-to-date, the stock's done okay. It's up about 4%. Over the last 5 years, though, it's done tremendously well, up about 462%. Over the last 10 years, up 946%. But as you said, valuations just don't look very good for this company. You go out to December 2026, estimated earnings per share here, $30.37. You get a target sell of just $504.14. It's trading about 26, 27 times those future earnings. And, I mean, the big thing you look at with these weight loss drugs is I still don't understand how much more growth can be achieved at these high profit margins for these companies. I mean, there is going to be competition, as you said, that comes in, and maybe the space continues to grow, but I don't think the margins that these companies make off the drugs will continue to grow. And you actually did see the Trump administration come out this past week. Looks like Dr. Oz, who's the administrator of the Centers for Medicare and Medicaid Services, noted that the price of the popular GLP-1 medications had not yet been negotiated by the White House, but Trump did suggest that obesity drugs, he calls them the fat loss drugs, could be much lower. Right. So they're putting pressure on them. They think they're overpriced. And I was kind of surprised by this. I did look this up real quick. I was like, people talk about, Eli Lilly's got other things besides just the weight loss drugs. But it looks like Mounjaro and Zepbound, which are the two drugs that they sell in the most recent quarter, had about $8.58 billion worth of revenue. Their total revenue is about $15.56 billion. So over half of their sales is now coming from these GLP-1 drugs.
Right. And if you have competition coming in, you got the government pressing down on prices. They do have a lot of debt, $34 billion in debt, long-term debt, and their equity is only $18 billion. So, I mean, you've got to invest in the future, but it's just something that, and again, everybody's trying to get the weight loss drugs. Competition. I saw something, Roe, another company, they're selling them, Hims. Everybody's selling these weight loss drugs. I don't know how they're doing them so cheap, but competition is very stiff in this, and I think it'll get stiffer as it goes on. And then if you've got the government coming in saying, yeah, you're overcharging for those drugs, you got to cut it. Eli Lilly could drop. Well, what was their stock price? I mean, I think
$802.83.
yeah, still pretty high. I mean, I think
Yeah, I mean, and again, if you're priced at 27 times those future earnings, you're priced for a nice growth rate. So again, things change as we talked about. That's where that multiple gets pressured and that stock has big issues.
exactly. All right.